Hey, good morning. This is Mayor Valensky with Driving Markets. First of all, I'd like to thank you for all the positive feedback that everyone's giving. It's really good. Let's get this channel out there. Let's spread it. Send it to your friends, colleagues, associates, whoever needs, whoever wants to get interest in financial markets. I'm hoping this channel will give them a little bit of a push, 5 or 6 minutes a day, gives them a little bit of a summary, a wrap on where we're going regarding shares, cryptos, interest rates, bonds, and of course FX. Those are forex traders. So I'll try and incorporate all of those within the 6 minutes in a quick summary. So let's start. So markets came off yesterday slightly. There's a couple of factors that impacted on the market. The main factor yesterday was the Russian-Ukraine crisis, or the war, as Russia intensified its attacks in certain areas, and the ceasefire talks seem to have gone nowhere. So that was the main factor. The other factor was the price of oil and the Europeans. So there could be, wait for it, there could be a rationing process going in place in Europe. Can you believe that we could be rationing fuel in Europe in 2022? Who would have thought of such a thing? But yes, that did come up on the agenda yesterday, and that sent the price of oil northwards, or should I say the Russian-Ukrainian crisis sent the price of oil northwards. And then with Europe having to sanction Russia, and wait for this one, Russia now demands all payments of energies to be paid by the Europeans in rubles. So work that one out. Europeans now have to exchange the euro for rubles to pay Russia on any energy supplies that they're getting, whether it's gas or oil, and that will cause the Russian ruble to go up in value. That is a great move by Putin. Very, very clever move, but that's what's going to happen. What else happened? What else happened in the markets yesterday? We also have the media companies. All of them fell on the back of what? There's now going to be more intense censorship of digital media, which means that all of these companies will have to stand up to the strict requirements of the US government. There's more policies coming in regarding making sure that media and access to media is much, much stricter, whether it be on the social level, whether it's the youngsters are monitored and make sure that the social media is not impacting on their lives, all the way up to criminal or terrorist activity or terrorist organizations that are using media, social media, to spread their murderous words. So yesterday's Twitter fell 5%, as did Meta, FB, Facebook also fell yesterday. So and Snapchat. So the social media platform is being more strictly monitored. What else happened? Cryptos came off slightly yesterday. Very, very interesting. There's a company called Axie Infinity. It's a video game company, and they got hacked. Their blockchain supply was hacked by hackers, in 600 million. Yes, $600 million of crypto digital currencies were stolen. So the blockchain technology was hacked yesterday on Axie Infinity, and that sent a little bit of a shudder through the crypto markets. Remember, crypto markets is based on anonymity and safety. You can't break into blockchain because there's too many multiple servers there to support the mechanism, and it's extremely difficult to hack into. But yesterday, Axie Infinity was hacked into. The other factor which caused markets to be concerned yesterday is the inverted yield. What is an inverted yield? Okay, so an inverted yield is where the 10-year treasury, the 10-year bond, has a higher interest rate than the 2-year bond. However, for the last few days, only the last few days, it looks like, or is a fact, that the 2-year bond is producing a higher yield, a higher return than the 10-year bond. And this is normally an indicator to a recession or the market, economic market going down. This has to happen on a 90-day period. We've only had a few days of it, so it's not exactly a hard fact yet that we're going to recessions, only an indicator, and it's the first time it's happened since 2003. However, when it does happen, it always ends up in a recession. So remember the fact. The fact is that the 2-year Treasury must always be lower than the 10-year, and in this particular moment in time it's higher, but it doesn't mean anything unless it passes 90 days. If it stays like that for 90 days, that is a sure sign of recession. Take that into account. In addition to that, also 30-year mortgage rates in the States, which will feed through to the UK and the Europe, are at the highest since 2018. They went up another 0.27% yesterday, so they're running at 4.8%, and that caused a drop in new mortgage refurbishment loans, new home loans, and new mortgage loans, simply because the cost of borrowing is going to go up. Remember, as I said, inflation is going to be in double digits by July. That's fact. How the central banks will deal with that is another question. In my opinion, they need to raise rates significantly. However, they are battling with a geopolitical situation of Russia-Ukraine, and they're battling with the cost of energy prices. And because they are battling with energy prices and all the other factors, they're reluctant to increase or raise interest rates. However, the impact of raising interest rates will impact on the regular everyday consumer. And I'm not too sure if raising interest rates will affect inflation, simply because I've said many times it's a supply-driven inflation issue. Let's go on to FX. So the pound has gone down significantly in the last 2 or 3 weeks, and that's the overall outlook of the British economy. However, in my opinion, I think the UK economy will come out of this pretty strong, and I'm actually a big buyer of GBP, the pound. So there's probably good opportunity. There's dollar strength out there based on, again, interest rate fears. However, you do have inflation reports coming out in the UK. Those inflation reports will show, most likely, inflation is running at 8% in the UK. As a result, the pound will jump on the back of that in expectation of rising interest rates in the UK, which will make the UK a more attractive place to place your money, and therefore the pound will rise. So on the FX front, I think the pound is looking, my opinion, of course, as an actual buy. Keep an eye on that one. The US dollar also is looking particularly strong, where the euro, in my opinion, will get weaker over the next week or 2 weeks. Remember, when you're trading, try and trade on a swing basis, because the markets are moving on a 3 or 4 day movement, and therefore look to hold on to your trade for 3 or 4 days. And if you're losing money, I'm sure that into 3 or 4 days you'll come back into profit. Okay, this is Mayor Walensky with Driving Markets. If you need to get a hold of me, contact me on LinkedIn, on WhatsApp, on YouTube, Instagram. Happy to speak to you. Have a good day. All the best.